Let's get it started with some trader talk on rails and retail with Brian Stutland, founder of Equity Armor Investments. The railway strike is averted. I can't help think, though, that big dive in the market earlier this week was not just about the disappointing CPI read on inflation, but was also tied to the threat of freight trains at a standstill. What do you think?
Well, certainly that added to, fuel to the fire there that we had earlier in the week. And now that we've seen like there's some sort of settlement that's going to occur here, we have seen some of the volatility, some of the option players in the market sort of take some of their bets off to bet on the downside in this market. And so it seems like the market is somewhat stabilized around this 3,900 level in the S&P 500. And so maybe this is an area where we can sort of find a temporary bottom, being some good news. But, on the inflation side, that's not going away anytime soon. There still needs to be some things that need to get done to sort of tame that down and get into a point where maybe we start talking about deflation instead of inflation. But I don't think we're quite there yet.
Retail sales rose 0.3%. Some people are calling that number sluggish, but in high inflation, is that number really that bad?
Yeah, well, it was a win. I think some of the initial look at that, though, beating expectations sort of to the upside on the retail sales numbers is that, okay, the Fed still has some more work to do. The economy is not quite cooling off like they'd like to see it, not necessarily, force us into a recession, so to speak. So I get what you're saying here. The retail number being somewhat good maybe is a little bit of a positive takeaway from the market, but it still allows it's another data point that the Fed can now still look at and say, yeah, we're okay hiking rates. And when they do that, you've got to remember, Angie, when interest rates go from where they were before to mortgage rates doubling to other ways of borrowing, basically doubling in value in terms of the interest rate payments, that's going to make it more difficult to see these growth kind of names sort of accelerate to the upside, because now people are going to be a little bit more mindful about cash flow heavy type companies. And that's just going to change the mentality of the market. So yeah, the retail number is somewhat good, but it still allows the Fed to say, hey, we can raise rates comfortably and try and create this soft landing we're trying to do.
Always appreciate you. Thanks so much, Brian.
Thanks, Angie.
Go to businessfirstam.com for where to see our show on TV.